All right, once again, you're welcome to tonight's webinar. It's a pleasure to see you guys tonight. What you have done is a very right decision because believe me, the secret about success is about learning every single day. The reason why some people are not going forward in their lives is because they have refused to learn. They believe in their degrees, they believe in their PhDs, but believe me, your PhD or your degree will not make you rich. What is the new currency? The new currency is knowledge. And it is not about the knowledge you acquired in school. School system prepare us to be employees. But the skills you're learning today, what you're learning right now, are the things that is going to guarantee your future. You're learning a skill that will pay you for the rest of your life. This is Forex. And what you're going to be learning tonight is the beginning of Forex, which is the ABC of trading. What is Forex? Forex is simply the shortcut, the short form of foreign exchange. Forex is the short form of foreign exchange. So if somebody said, I'm trading Forex, it means that he is trying to say, I am exchanging one currency to the other. That is the meaning of foreign exchange. So I'm going to be taking you the ABC, the basics of Forex, because before you understand the trading, you also have to master Forex, as in like in school, nursery 1. So the basics of Forex is like the nursery 1 of Forex trading. If you don't understand the nursery 1 very well, you won't even be able to trade correctly. So that is why the basics is very important. For those of you who are here for the first time, I want to welcome you to La Prince World Academy. My goal for you in this academy is to prepare you to become a good trader. Is to prepare you to make money online every single day trading. So let's go down to the lesson. Right now, did you know that you have already participated in the forex market if you have traveled overseas and have to exchange your money? That statement is a very powerful statement. You see, ladies and gentlemen, whenever you or I travel, let's say you're traveling to UK from Nigeria or from Ghana, whenever you make that decision to make a travel, to take a tour, to go to your holidays and all that, that's time, you remember you give your money to whoever, the Bureau de Change people, they call them Bureau de Change. Those people usually take your Naira or your CD, whatever, if you're in Kenya, your Kenyan shillings. Those people that does that, what they are doing actually is called foreign exchange. They take your Naira and then give you the currency of the country that you are traveling to. What they are doing is called foreign exchange. So indirectly, most of us are already traders, but we are not aware that we are traders. So whenever you're traveling out of the country, out of your own country, and you are giving money to someone to give you another currency, that transaction that takes place is called foreign exchange. But the one you and I are going to be talking about is not that kind of trading. We are not that kind of traders. We are not that kind of traders. We are trading with our smartphones or computer. So let's go down to the nitty-gritty of trading. I want to believe you guys can see me. All right. So Forex is basically the largest market in the world. This write-up is a little bit old, okay, but now it's over $6 trillion. Forex, the New York Stock Exchange, New York Stock Exchange trades approximately $22 billion daily, but the Forex market is over 6.3 trillion. This is an old write-up, but at the time of this particular graphic design, it was over $5.3 trillion every single day. Now, in Forex, we talk about buying and selling. Remember, we are buying and selling currency pairs. Remember, Forex trading is the buying of one currency and selling of another. You are not trading one single pair. You are trading. It's a pair that you are trading. You are exchanging one currency pair for the other. So what are these currency pairs? Number one, there are three. They have three tons of them. Number one is the majors. Number two is the minors or crosses. Number three is exotic. So let's look at them one after the other. Now, these are the majors. Now, these are the majors. The majors are any currency pair that contains the USD dollar. They are the most liquid. Liquid means that they have more movement. A lot of people are buying or selling them. There is liquid. In the market, we call it liquid. They have more liquidity than the rest of the currency pairs. These are the ones that contain the USD dollars, like the Euro USD, that is Eurozone, stroke United States. The Greek name is called Euro dollar. We have the USD JPY, United States Japan, that is JPY is the Japanese yen. We have the GBP USD. The GBP USD is called, the Greek name is called pound dollar, that is United Kingdom, United States. We have the USD CHF, which is United States, Switzerland. The Greek name is called dollar Swizzy. You can screenshot these things, very important. We have the USD CAD, that is Canadian dollar, United States, Canada. The Greek name is called dollar loonie. We also have AUD USD, that is Australia, United States, Aussie dollar. We also have New Zealand, United States, that is Kiwi dollar, that is the Greek name for this particular currency. So let's go to the next one. Now remember, I told you that the currency pairs, the pairs are three. They are crosses, and we have crosses, we have exotics, and we have minors. Okay, so let's talk about the crosses. Let's talk about the crosses. The crosses are any currency pair that does not contain the USD dollar, but they are also derived from the three major non-USD countries, currency, e.g. the Eurozone, the Japanese yen, and the Great Britain pound. They are also referred to as crosses. So now let's look at these pairs. This is GBP crosses. It means they contain the GBP, Great Britain pound. So what you're seeing on the screen is the GBP crosses. We have GBP CHF, that is Switzerland, pound Swizzy. We also have GBP AUD, United Kingdom, Australia, pound Aussie. We also have GBP CAD, that is United Kingdom, Canada, pound loonie. We also have GBP NZD, that is United States Kingdom, New Zealand, pound Kiwi. Now, you don't have to climb all these things, or you don't have to trade all these currencies. The reason why I am showing you all these pairs is for you to choose among them one or two to trade. A lot of mistake traders make is this. Most traders thought that trading is all about trading all the currency pairs you see in the market. And it is also trading all the market you see in the market. You don't want to be a jack of all trade and master of none. If you want to be successful in trading, it's important that you choose one or two. All this currency pair, just choose one. If you like the USD dollar, pick one currency pair that contains the USD dollar. Master it. Not trading USD JPY, USD CAD, USD AUD, AUD CAD. You are not going to make good money from the market. But once you pick one or two, first pick one as a beginner. As a beginner, pick one. Don't go and trade everything because you are seeing all these pairs. They are going to be traded. No. Just pick one. Start with that one. Master how that particular pair moves. How does it move? You have to understand how it moves. Once you understand the movement of that particular pair, you can now say, okay, now I can add another one to my portfolio. It's a gradual process. All right. If you're with me, say yes. Are you guys with me? Are you guys with me? Now we'll have the euro crosses. These ones are okay, good. These ones are the euro crosses. These crosses, they are also called minus. Good, 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 good. They are also called minus, and they are also good. Euro CHF, Switzerland, Euro GBP, Euro United Kingdom, Euro Pound, that is Greek name, Euro CAD, Eurozone Canada, Euro Luni is the Greek name, Euro AUD, Eurozone Australia, Euro Aussie, Euro NZD, Eurozone New Zealand. The Greek name is called Euro Kiwi. All right, now let's talk about this one's called exotic. Remember, I told you we have three types of the currencies. Exotic currency pairs are not much volatile. They are not liquid. They are not liquid, and if you are trading them, the spread is very high because it will be very difficult for your broker to look for a buyer or a seller in order for you to exchange this particular currency because people are not trading them. These are the ones you're seeing: USD, HKD, United States, Hong Kong, USD, SGD, United States, Singapore, USD, ZA, that is United States, South Africa. So these are not as traded, and they are not traded as much as the other currency pairs I have described so far. Now, let's look at the next slide. All right. Now, what are the Forex trading sessions? What are the Forex trading sessions? We have 4 sessions all over the world, depending on where you are. We have what you call the Sydney session. Now, the Forex session, the Forex market is open 247 Monday to Friday, Sunday to Friday. Is open every 10 a.m., 10 p.m. rather Nigeria time, depending on the time zone you are. You can go to Google, and if you're not in Nigeria, you can go to Google and search your own time zone, because I believe we have other foreigners with us in this academy. So we have the Sydney time. Sydney is the very first opening is the Sydney. It opens 10 a.m. After the Sydney, the Tokyo session opens. As at 11 p.m., the Tokyo opens every Sunday, 11 p.m. Now, today, as we are very soon, in the next 1 hour or so, 2 hours, okay, in 11 p.m. tonight, the Tokyo session is going to be opening. So if you are trading Japanese yen, The Tokyo session, also known as the Asian session, is going to be showing, you are going to be seeing Japanese yen moving. You are going to be seeing Japanese yen movement in this session. These are the trading session, and we also have the New York, the London session. London session opens. You can see the time. Also, this was an old this was an old graphic design. I think now it's 7 a.m. or so. You can check it. It's online. We also have New York session. Now, what are the best time for you to trade? The best time to trade is Tokyo, London overlap. London, New York overlap. So Tokyo time is good for me. Sydney is a no-go area. Sydney, this is not a time you will see a lot of movement in the market. It is important you understand the best time when the market is opening. For those of us who are trading Forex, but for those of us who are trading volatility indices does not have a particular session. Market is open all the time, and for that particular instrument, it don't need fundamental analysis. But in Forex, how do you know the movement of the market? Number one is called fundamental analysis. Fundamental analysis rather has to do with news, what happens in the news. I'm going to be showing you in the course of the training how to trade fundamental analysis. For today, this is just the beginning for you to understand this. But you have to understand that the market is open 24 hours doesn't mean that you have to trade that 24 hours. There are times you trade that the market is very, very liquid, that you can make quick money out of the market. And this is the openings of this market. That London opening, 7 a.m., you can check, open your chart, because that is when in London banks are opening, they want to place trades. Remember, you and I, we are just retail traders, and we are just 20%. We are called retail traders, and we are just 20% of the Forex market. The major Forex participants are the banks, federal governments of the world. It means that every government needs Forex to sustain the economy. Every government needs Forex exchange. We have hedge funds. These are the people who control the market, not you and I. You and I we are just 20% of the market. So when all these people trade their market, is the openings of this market. As the London is opening, banks are opening in London and some other European countries, the market is going to be very liquid. That is when you can look at their chart, look at the reason, the candlestick formation, they are very fast within that period. And then from 4 p.m., the market is going to be dying down in London. That is when, if you are a day trader, you have to be thinking about getting out of the market because the market is going to be dying down. No, I didn't say, Gideon, I didn't say it is not advisable to trade on Mondays. Every Monday to Friday, it is good for you to trade. But what I'm saying is that the trading hours matters a lot. You don't want to trade the market when like 10 p.m. now it's 10 p.m. London. I mean, almost 9 p.m. now in London. This is not a good time to trade London pairs, as in GBP pairs. But when you come to New York session, this is where you have to trade the USD pairs. Any currency pair that contains the USD dollar is moving massively. So during this period, you can actually trade USD pairs. So the best time is that 1 p.m. our Nigerian time. Depending on where you are, you can find out from Google. Know your time, that New York time, that early morning when banks are opening in New York. You want to see the USD pairs, how they are moving. Then as New York time going to 5 p.m., 6 p.m., 7 p.m., if you're a day trader, because we have day traders, types of traders I'm mentioning right now. We have what they call day traders. Day traders are people who wants to take advantage of the market within the day. They trade as the market is closing. They are also closing their trade. They are called day traders. We also have people called scalpers. Scalp is L. Okay, let me just write it here so you can understand this. Okay. Oh my God, it's not right up is unclean. Maybe I will use maybe I'm gonna use okay. Scalpers. Scalpers, we have these are types of traders. So you need to understand what kind of trading style fits your personality. Right? You need to know what trading style fits your personality. We have swing traders. Swing traders. Me, I am more of a swing trader. We also have position traders. Position traders. These are very important. All right. Now, once you understand the kind of trader you are, you will now be trading according to your personality. Scalpers are people who get in and out of trade within minutes. They are out every single minute. If they place a trade, they are not willing to wait till the trade moves to a direction. Sharp, they are out of the market. They are called scalpers. There is a lot of money in scalping, but if you're a beginner trader, I will advise you don't do scalping because it will confuse you. It's just like somebody who is playing a computer game. If you are playing a computer game and you are starting from level 10, because level 10 is very fast, you won't make money. You will not be able to play the game very well as a beginner, especially you are still mastering that game. So if you want to enjoy trading, you have to start becoming a swing trader, a day trader like that until when you master the skills to an extent, you can now be trading scalp. You cannot be scalping the market in and out, scalp out, scalp in, scalp out. It's a good way of making money too. But for me, it's too stressful. Scalping means that you have to be on your computer. As far as you are trading, you have to sit in front of computer. It is not easy to stay in front of computer and be trading. But when it comes to swing traders are people who can hold their trade. They can hold their trade, all right, for days, for even weeks. They are called swing traders. Then we have position traders. Position traders are people who can hold their trade. They are called investors. Once they place a trade like Warren Buffett, they will just forget the trade. They can even keep it for months, even for years. They are called position traders. Once they know the direction of the market, buy or sell, they place their buy, they put their stop loss, they close their laptop, they go about their normal business, and nothing concerns them with what is happening. In the next few months, they will just check their computer. Has it reached my stop loss? Has it reached my take profit? That is how those guys trade. Okay. All right, now below is the chart of average pip range for the major pairs for each day of the week. Sundays. Below, this means that these pairs, as you are seeing, remember, market opens on Sunday. This is what happens within the week for each pair. On Sundays, Euro USD move an average of 69 pips. We are going to be learning about pips. Mondays, Euro USD move an average of 109 pips, except there is a major news. On Tuesday, Euro USD moves an average of 142 pips. On Wednesday, the Euro USD moves an average of 136 pips. On Thursday, the Euro USD moves an average of 145 pips. Then on Friday, market is also very volatile. Liquid that day, people are getting in and out. So you can screenshot this. Every day has its own movement, but the Sunday are always because that is beginning of the market. The day people start trading, the market is not that liquid. Now, what is buying? Buying, as I remember, I told you that is there no time of period? Somebody said, is there no time? Is there no time or period limits for a buy or sell command? No. Like I said, you can buy anytime or sell anytime, but if you look at the slide below, we talked about the best time to trade is, you don't want to trade when market is dying. You have to trade during these openings, like London openings. It is that best time to trade. New York opening, the best time to trade. So not all the time you place a trade because the market is up. The market is open 24/7. The time you trade matters a lot. So be careful when you place a trade. Is it the time market is liquid, when a lot of people are trading, or only when few persons are trading? It is better you trade when a lot of trading activities are going on. Do you understand? Okay. Now buying and selling. Buying and selling. Remember, I told you market is all about buying and selling of currencies. So now, how do you buy? How do you sell? Now, buy if you think base will gain value relative to the quote currency. Base, remember, this is pair. Also going to show you in real charts how it looks like. This is pair. Now, if you feel that the euro is going to be going up, it means that the euro is going to be adding more value than the US dollar if you place a buy. And if the price goes up indeed, you make profit. And the difference between the buying and the selling, that is called spread. That price difference is called spread. Like now, 1.08660, all right, is the base. The quote is, if you are buying this, it means that you are buying, you are actually buying. It means that this euro is going to be adding value. You are getting rid of your euro. I don't know if you guys understand. You are getting rid of your euro to get USD. When you sell, when you buy, you are getting rid of your euro, your USD to get euro. So whenever you place a buy, it means that the price must go up. If the price doesn't go up, if it goes down instead, you lose money. Now, sell pair if you think they lose value relative to the quote currency. What does this mean? It means that if you feel that the USD is going to be going down, this euro is going to be going down, you sell it, you get rid of it, you place a sell, because this is the base currency. You place a sell, that means this euro is going to be losing value. And if that happens, you make profit if the market goes down. We are called market. We are just like weather forecast people. You forecast the market. You understand what is going to happen based on history, based on fundamental, the news, what is happening in America, what is the American president saying about the economy, what is the British Prime Minister saying about the Britain government. What is the European president saying? You know, those are the things. We'll get to that place. Then you look at their charts. You look at your charts, fundamental analysis and technical analysis. You look at charts. Some people use indicators and all that. You also get to learn about how to read the market and make money in trading. So base currency is the one that you have on the left, while code currency is the one you have on the right. Now, look at this chart. If you look at this chart now, this is how it looks like in the real chart, where the market is. Now, if you sell here, let's say you place a sell. If you place a sell here and price comes down, what that means is that you have made profit. And what you have made is called pips. In markets, or in the forex market, or in any market, what you make is called pips. All right. In stock, they call it points, but in forex, it's called pips. Now, if you had placed a trade here, place a sell, and then price now fall down, this person has made 80 pips. And let's say you buy from this sell buy signal, you buy here and you hold your trade to this place. This simply means that you have made 160 pips. So we are going to also learn how does pip correlate with how much money you're supposed to make in the market. So let's go. All right, now going long, going short, going long or taking a long position. These are some of the things you are going to be hearing in the market. Going long. When you say a trader say, I am going long, I am going short. These are terms that we use in trading. Going long meaning that you are placing a buy. Buy actually means buy the base currency and sell the code currency. When you place a buy, it means that you are selling the code currency. You want the base currency to rise in value, and then you would still sell it back at a higher price. Going short or taking a short position. Sell actually means sell the base currency and buy the code currency. That's what I've explained. When you place a sell, you are getting rid of. Somebody said if you place a sell, must you also indicate a sell point for take profit? If you place a sell, must you also indicate a sell point for take profit? That question, I don't understand. Maybe you have to reframe. Maybe you use different language so we understand. All right, so let me just explain. We are going to ask questions. Just write down your questions so that after the lecture, you are going to ask your questions. Now, sell means that just write down your question, please, so that we can take it after the lectures. Now, when you sell, you expect the price to fall. That is when you make profit. So let's go back. So here is majorly, this is where we sell. These are sell signals. You sell here. These are the sell points. All these top, you sell from the down, from the top rather. Buy signals are these signals. All these are buying signals. If you place a buy, price comes up here, you make some profit. Now, what is a pip? Is very important. You know what is a pip. Pip is the reason why we are all here. How do you make money? Because the money you make should be in pips. You have to learn how to make, say, I have made 50 pips in the past few weeks. And I have made 50 pips today. I have made 500 pips in 1 week. That is the language traders use. Traders don't use, I made $1,000. No. Once you learn how to make pips, the money equivalent will come. You will just learn how to make pips, not learn how to make money. If you learn how to make $1,000 a day, it's probably maybe you are gambling. But when you use the proper lot size and make pips, maybe you may not make $1,000 as the person who is gambling is making, but you are learning it. You are more a professional than someone who is just gambling and he collect all he's interested is the dollar sign. Once he sees $1,000, he closes his trade. Probably he's taking too much risk to make $1,000. But once you learn how to consistently make profit in pips, you're making 50 pips every day. Once you are comfortable doing that, then you now know that you are a trader. Even if you are using the smallest lot size, 0.01, which is 10 cents per pip, if you can learn how to be making 20 pips every day from that lot size, you are a big boy. Because the time you will start trading with big money, the same thing you will make. So learn how to make pips, not the dollar. Now, what is a pip? A pip is the unit of measurement to express the change in value between two currencies. The unit of measurement to express the change in value between two currencies is called a pip. Remember what I told you, when price change, like for instance, when this happens, all right, when this happened, this market was placed here, but the price changed, the price came down. When price change in value, that price change in value is called pip. That is called pip. All right, so if I say that Euro USD is at 1.3020 plus 1 pip, then the Euro USD is at 1.3021. If, on the contrary, I say that the Euro USD is at 1.3020 plus 1, minus 1 pips rather, then the Euro USD is at 1.3019. So as you understand, the pip is nothing more than the fourth decimal number after the comma. Now, if you look at this, we have 1.3021. So this fourth is the pip. So pip is the smallest number, but we want to get to understand that, and it's the fourth decimal number after the comma. So it's the measurement of price changes. When price changes in value, that changes in value is called pips. And we are also going to understand and calculate pips. So in order to measure the quantity, we have 0.001. Remember, the first decimal number is called pip. This is 1 pip. 0.00210, the fourth, this is 10 pips. 0.100 is 100 pips. 0.1000, this one is 1,000 pip. Are you following? Some currency pairs, among which the most famous are those with the yen as code currency, have only 2 decimal figures after the comma. Therefore, the Forex pip is no longer the fourth, but the second decimal place, and the pipette becomes the third. If USD JPY rose from 103.25 to 103.26, the deviation was of 1 pip. As according to this one, this is JPY. JPY pairs are different. In JPY, the pip is the second decimal number after the comma. That this second one is called the pip. You may not understand this thing for the first time, but the more you watch these videos, the more you understand it. So if USD JPY rose from 103.251 to 103.252, that is 1 pip in value. Okay. Now let us know how to calculate pip. Now, how do you calculate pip? Because you need to understand what is pip, and then you also need to understand how to calculate pip. Now, how do you calculate pip? Let us do this mathematics. It's very important for you to calculate pip. Let's say you enter NZD/USD on a sell at 4.56567 and exit at 4.56776. What is the pips you gain or loss? For you to get the answer, very simple. This is your entry and this is your exit. Once you subtract your exit, your entry minus your exit, it will give you these numbers. You now divide it, this 0.00209 divided by 0.0001. It will give you this number. Are we following? Can we do the calculation? Maybe I'm going to show you. I'm going to give you a number to. Let me see if you guys are following, so that somebody can give us a correct answer for that particular. Are we following? The formula to calculate PIP in Forex. Are you getting what I am saying? This is a formula, just like in mathematics, we have a formula to calculate some mathematics. You minus the entry minus exit. Just use your calculator. It will give you this figure. You now divide this 0.001 is the formula for this PIP, but for Japanese yen is a different formula. Once you minus this, the entry minus the exit, use your calculator, it will give you this figure. Then you now divide it. All right. Okay, good. We are getting it. You now divide it by 0.001. It will now give you 20.9. Don't mind, this is called pipette. Forget about the 9. Your money is 20 pips. So it means that you have, why are we diving by 0.001? What about 0.0? No. The formula, that is the formula Prince Fairbarbour. The formula for calculating pips, apart from Japanese yen, this is the formula. The formula is 0.001. Remember, pip is the fourth decimal number. So this is the formula to calculate it. This is the formula to calculate pips. Is 0.00, is 4 zeros. It will give you this. Once you divide this by this, that is what the money you will get. You can use a calculator. If you have with your calculator, I believe all of us have a phone that has calculator. So maybe I will do my calculator here myself. Let's calculate it again. 4.56. If you have with your calculator, you can punch it 4.5677. All right, that is the entry price. You can do any of them, either entry minus exit or exit minus entry. Anyone you take first, it doesn't really matter. 4.56776 minus 4.5567 divided by 0.0001. Let's take another example. Let's say you enter. Let me look for another pair here to take. And we are going to do Japanese yen as well. Let me look for my. I'm looking for my charts on trading view. Okay. Let's say we go ahead and this is Euro USD, all right? Let's say you enter from here. Let's say you enter a cell. Let's say you enter from this pin bar. That is 1.21196 minus. You have to click the minus. All right, minus the exit. You're exiting here where the current price is minus 1.1846. Once you do that, okay, let me be typing it here so you guys can see it, what I'm doing. Okay. 1.21196 minus 1.18461. Once you do this, it's going to give you a number like this, 0.02735. Now you're going to divide this. You're going to divide 0.02735 by 0.0001. Whether by 0.0001. If you do that, what you're going to get is 273.5 pips. So if you had entered this market from here to this place, it has given you 273 pips. So you can use TradingView. TradingView is another platform where you can use to measure your pips. Let's measure with TradingView. This is where to measure pip. This is automatic with the app with TradingView tools, but it is good you know how to calculate it manually. Let's measure it. We may not get the accurate number. Okay, no, that's not where we go. We entered from here, right? We entered from this point. All right. I think we are not getting it. So this is the accurate pip from this point to this place. It gives us 273 pips. That is how you calculate pips. But if you are calculating it with Japanese yen, there is a different formula. Let's say you want to trade Japanese yen. And let's say you are doing Euro JPY. Let's say Euro JPY. All right, for Japanese yen, let me remove all this. For Japanese yen, what you are going to do is this, how to calculate it. Let's say you enter from here. let's say you place a buy from here. That is 125.127. Then you exit your buy here. That is, you please say minus, right? Minus 128.554. So let's do the calculations for Japanese yen. At first, it will confuse you, but with time, you are going to be used to everything. Right? This is the very basics about Forex. You need to understand this, otherwise you have not started. Now, let's say 125.127 minus, this is the entry price, right? You now say minus 128.554. If you do this, it's going to give you something like this. It's going to give you something like 3.427. Yes, it's going to give you this. So you now say 3.427 divided by 0.01. If you do this, it's going to give you 342.7 pips. So this movement, if you had entered this trade, all right, if you had entered this trade from here to this up here, you must have made 334 pips. Are you guys following? Is anybody confused yet? So that is it for pip calculation. Let's go to our next slide. Okay, you are getting, okay, good. You can rewatch the video later. All right, so what is leverage? What is leverage? Leverage is actually, let me just use the word borrowed money. Whenever you want to place it, whenever you want to create an account with a brokerage firm, a broker is where you have to deposit your money to trade. They give you leverage. Depending on the country you are, like in this part of the country, we are giving 1 into 100. 1 into 100. It means that any $1 you deposit in the brokerage account, the broker gives you $100. So you can have small money and take a big position because of leverage. They call it borrowed money. So if you are in this part of the country, Europe, and we in Africa also, we have opportunity for most brokers give us leverage of 1 is to 100, meaning every $1 gives you 100. Like in US, it's 1 into 50. So if you're in US, if you have $1, your broker can give you $50 as leverage. So leverage, when you are selecting your account to trade Forex, there is a place you will fill 1 into 100. Make sure you do that. So leverage literally basically means the money you borrow from the broker to trade in the market. Now, when you sign up with your broker, you are asked to select a certain leverage amount. This is what I mean, 1 into 100 or 1 into 200, but 1 is 100 is okay. This is just too much. This is very, very okay. 1 into 100. Broker as the people that you trade. You can't just be in your house and place a trade. You must sign up In forex or stock, they call it broker, but in crypto now, they call it exchanges. You need to sign up for with a broker, and then you can now be trading, then withdraw or deposit to them. Once you deposit money, after you make profit from your trades, you can now be withdrawing your money. All right. What is leverage is a strategy that uses borrowed capital to increase potential future returns. This is just a definition about leverage. All right. Now, what is a lot is very, very important. Lot sizes are very, very important. Remember that every time you make profit in pips, your dollar value is going to be determined by the lot size you use for that trade. Anytime you place a trade, the dollar value of that trade is going to be determined what? By the what? The lot size you are using. A lot size, a lot refers to a bundle of units in trade. If you buy a 24-pack water, you are essentially buying one lot. You can't buy 3 bottles. You have to purchase them as a full. So let me explain. Now, these are lot sizes in forex. And this is where people lose money. So pay very good attention. Can we say that JPYN is easy to make profit? That is not true. Prince, all of them are the same. It doesn't matter the currency pair, but what matters is, do you know when to buy and sell? So look at what I am talking about. Pay very close attention to lot size, because lot size can make you rich and it can also make you poor if you don't know how to apply them at the right time. Now we have what they call standard lots. If you are trading with the standard lot, it means that you are controlling 100,000 units. Remember, you can't just come to the market without controlling a particular unit. You are controlling 100,000 units. And because you have leverage by a broker, you can trade a standard lot size with small amount of money. Without leverage, you have to come with at least $100,000 to trade standard lot. But because of leverage, even with $100, you can see that people are trading standard lots, even if that is not the right way. We'll talk about that in risk management in another class. Now, lot size is this. If you are trading with standard lot, it means that every time your market move, like we talked about this movement, 342, like you make profit, you make 342 pips. Let's say you are trading with a standard lot and the market move in your favor. You have made 342 pips. 10 times 342 will give you $3,420 for only one trade, because you are using a standard lot. For standard lot, every pip movement is 1 pip, is $10 rather. And in standard lot, that is how it looks like in the real MetaTrader 4 or 5, anything you are using. When you are placing a trade, this is how standard loss looks like. It's 1.00. It's important that you know that. It's very important you know what is standard lot and you know what is a micro lot, because if you don't have good accounts, you don't have to trade standard lot. Standard lot is for people that has their money, they have the money and they know what they're doing in the market. But for someone who does not know how to trade and perhaps doesn't even have the money, you don't want to use standard lot. You want to just maintain your normal lot size. I'm going to show you how it looks like in the real market. Now, let me see if I can share my phone screen. I'm coming. Let me see if I can share my phone screen. Okay, I want to show you something about lot sizes so you don't make the mistake. It's very important that you understand this thing so that whenever you're placing a trade, you know the correct lot size to use. So let me share my phone screen so you can see my phone screen. Please, can you see my phone screen? If you can see my phone screen, can you type yes? Can you see my phone screen? All right, good. Now, this is very, very important. Most people will not teach you this. Now, look at the lot sizes. This is when it is here like this. This is 0.01. This is called micro lot. But standard lot looks like this. You click 1, 0, 0. If I click buy or sell now, I am using a standard lot to trade this market. This is a standard lot. I'm using a standard lot to trade this market. Now, let me show you all of them. Let me show you. You see how it looks like standard lot looks like this? Let me explain it first, then I will show you on my phone as well. This is standard lot 1.00. If it is 2, it means 2 standard lot. That means that any trade you place, you are making $20 for per pip. Mini lot meaning that you are controlling 10,000 units of currency, 10,000 units of currency. And for every $1 pip, like for that particular 300 and something pips, you are going to be making $342. And this is how it looks like. It's 0.10. It is called 1 mini lot. If you change it to 2, it's going to be 2 mini lot. And at that point, what you are going to earn is $2 for that particular trade. We have the micro lot. Micro lot, if you are trading with micro lot, it means you are trading with 1,000 units of currency. And with micro lot, this is what you see. You make 10 cents per pip. And this is what you see on the MT5 or 4 platform, 0.01. For that particular movement, you are not going to make more than 30-something pips for that movement. So depend on the lot size you are using, the profit you make depend on the lot size you are using. The most important thing is to learn how to collect enough pips so that even if you are trading with $100 and you are making good number of pips, it is good. Don't worry about that. There will be a time you'll be controlling standard lots. That is when you have perfected your skill. At that time, you can now be using big account and big standard lot. If you're making $50 every day, when you are using standard lot, it means you are making $500 every day. But if you are using micro lots, that means that $50 is just 5 cents, $5 rather. And if you are using mini lot, it means you are making only $50. But do not concentrate on the dollar, concentrate on the number of pips you make per day. Are you guys clear on this? If you are clear on this, type I am clear, or just type 111. If you are clear on this, type 111. Okay, good. Concentrate on the number of pips you make from the market, not the dollar. Learn how to collect enough pips from the market. So let me share my screen and show you how to type each of these things so you understand. Now the first one is this is called standard lot. Now let's say you want to do 2 standard lot. It means you are making $20 per pip. It's going to be 2.00. All right. Now let's say you want to do micro lots. You just click. You can use this plus sign to change it. But I like to just type it. Just clean this. Type 1. This one, if you are doing this, 0.10 is 1 mini lot. It means anytime you make 1 pip, you're making $1. Now, if that thing is going to be true, it means you are going to be making $22 per pip. Now, that is for micro mini lots. Remember, mini, standard, and micro. This is what we call standard lots. I mean, micro lots. For micro lots, it has to be like this. Remember, it has to be like this. This is where the confusion is. If you understand this, it means that you have also understood how to place trade, because most people don't understand this. They just place trade with $100 and they are placing with standard lots. That is where they blow their account. They say, I have lost money in Forex because of misuse of lot size. So always use 0.01. If you don't have big money, maybe $100, $200, use 0.01. Perhaps only one position. We'll get to that one in our next class. So this is how you can trade. You click buy or sell, your trade will be, it will be showing on the screen. We'll get to another lesson. We'll learn how to place trade, but this is basically how the lot size looks like. All right. Okay, we are going to be talking about trading window. What is margin? I'm going to be showing you some things about trading window. Once you click on your MT5, what is margin? Trading window is what you see on your app, on your MT5. Like when I'm always display my trades, that is where you call trading windows. So what is margin? You gotta pay to play. Margin is a down payment a trader makes to participate in a trade. Margin is calculated based on leverage. Okay, to control 100,000 units on a 1:1 leverage, you need $1,000. All right. Remember, when you are placing a trade, this is how your MT4 or MT5 looks like. This is the balance. This is the money you come in with. This is your money, free margin. This is the money in your account that is available to open any position. Okay. This is your balance. Equity. Equity is either plus or minus what your trade is giving you. Like in this scenario, this trade, I was making $144.32, 31 cents. My balance was 4,009. So it's equity is your balance and your loss or your gain. So that is why you see that the equity changes. If you are losing, your equity will be going down. If you are winning, your equity will be rising. Free margin is the amount you still have to take another trade. Margin level percentage, it is very, very important, guys, that you don't allow this to go down. Once you take plenty positions, you have plenty trades going on, this margin level percentage will be going down. And if they go down, once they get to 100, most brokers will close the account. And that is when you hear somebody say, I blow my account. You are going to blow your account if perhaps you just have $100 and you have so many positions going on. Your broker will definitely close the account and all the money is gone. So don't allow this margin level percentage to come down to even 200 even too low. It should always be high. That is why you have to take low positions, low loss side if you don't have good money. So be very, among everything here, this is the most important. Margin level percentage is very, very, very important. So balance is how much money you actually have deposited into your account. It includes your profits and losses. Equity is how much money you actually have liquid, invested, while the money is invested. Is equity is how much money you actually have. All right. Equity is the amount, is how much money you actually have liquid invested. While the money is invested, it still counts towards your equity. When you are actively in a trade, equity fluctuates. I just said that. Okay. So margin level, also called margin call. When you hear margin call, that is when a broker closes your account because you don't have enough money. It is called margin call. Is the level brokers use to determine whether the trader can take any new position or not. The limit is actually 100%. Like I told you, with most brokers, this limit is 100% margin call level. Happens when your account equity, that is equal to margin. At this point, you cannot take on any more position and your broker may close your positions. So very important, this your margin level should always be high. This is good because it is very high, very, very high. Okay, this is for candlestick. For those of you, we are going to talk about candlesticks in our other videos, other classes. For now, we have come to the end of today's class. I want to thank you for coming. And again, I want to encourage you to, first of all, I tell you every day in this academy that before you start anything, you have to be clear about what you want. I want to believe that all of you know the reason why you are here, because if you don't have a reason, if you are why, if you don't have enough why, you won't have commitment. For people who are successful in anything they do, they have a clear vision about the reason why they are doing what they are doing. How long will it take to make double fold of your equity? It doesn't matter. It depends on your trading style. It doesn't matter how long. You can make it. You can even make profits a day and double your money. It all depends on your level of skill set in trading. So ladies and gentlemen, I want to encourage you to have this clear vision about what you want, because successful people are people with clarity. They are very clear, don't have vague desires. If you want to if you want to excel in any area of your life, it has to be a clear vision you have seen for yourself. So I want to believe that all of you listening to me tonight, you have this as a vision you've seen for yourself, not just doing something because you don't have what to do, but let it be that you have seen it, because success is about clarity. Be clear about what you want. And then once you become clear about this as what you want to do for the next 10 years, for the next 5 years, you have to write your goals down. And then one thing is to write your goals down. Another thing is to take action every single day. I have seen people who have paid for classes, this class, but they have not one day read a book or watched a video or even attended our webinars on how to trade. So that shouldn't be you. You have to be taking action every single day. How do I get better? How do I learn more? Once you do that, it doesn't matter how complicated the skill is. Right now, the Forex market is very complicated to you because you are new. But if you make a decision to take action every single day, I'm going to do this, at least do something every day about this you have seen for yourself. It's a goal you have seen for yourself, it's a vision. This is where I want to be in 5 years' time as a trader. Write your goals down, write those things down, and then you take action, reading the books, learning the skills, attending classes, paying for more mentors to always get better. One of my mentors said something. He said, if you spend an average of 1 hour every single day learning any skill of your endeavor, he said in 5 years or less, you'll become a national expert in that field. So ladies and gentlemen, spend time on yourself, invest more time on you. You are the roots of your success. Why do I say so? If you are successful, Number one, in mind. In mind, you have to have the right mindset. You have to have the right habit. We are creatures of habit, habits, habits, habits. You have to have the right character. I will teach you everything in this academy, but if you don't have these three things in place, it's like you driving a car with one leg and one leg and one hand. You have your mindset got to be right. That is why the lesson, the class is not complete until we talk about the mindset. Your mindset got to be right. That is why I keep encouraging you in this academy to read books. Until your mind changed, nothing changed in your life. Write it down. Until your mind change, nothing changed in your life. The investment company you invest the money will not change you. The Forex will not change you until your mind shifts. You must have a mental transformation for any change to take place in your life. You must be mentally transformed. The Bible says, be transformed by renewing of your mind. The Bible says, as a man thinketh, so is you. You are what you think about. So be very careful about your mindset. Your mindset is the key, is the main thing about your success. If you change the way you think, everything in your life will change. So be very important, very, very important that every day you invest on the mind. Read books like Think and Grow Rich. Very good book. I've sent you those books. The Magic of Thinking Big. Those are the books that will program you. Because why do you think the way you think? Most of the time is because of the way we grow up. Most of us grew up in environments that are not really good for our environment. We are not really good for our progress. We grew up in, most of us, 95% of us grew up in unfavorable environment. So we behave like them, we talk like them, and we earn like them. So for your mind to be programmed, because we are programmed just, our parents say they love us so much, our parents tell us, children, go to school, have a good grade. And you know what? You have a good job. So we have that mentality of going to school, very smart people. Once you don't make A in your school, they tell you your brain is dull. Once you pass, you have E, or you fail a subject, a course, they tell you have carryover, you have failed, you are not smart. But let me tell you guys, we are all great people. You and I, we are great. We are made great by God himself. You have greatness and you don't allow their school result to determine your greatness. It doesn't matter whether you have education or not. Their school level of, what is it called? Their school's results does not measure, it's not the true measure of your greatness. Don't mind them. What you need to do is just to discover who you are. Until you discover who you are, you will never live a life that is worth living. You have to discover who you are. Be every single day, find a way to learn something. Self-discovery is very important. Your habits. We are creatures of habits. What you spend your time to do every single day matters a lot. We have 24 hours of the day, but most of us spend our hours in doing things that do not have value. It's very important that how you spend your time will determine your 5 years from now. Because success is predictable. Success is not one giant thing that just happened to you overnight. No. Success is predictable. Why is success predictable? Success is predictable because of laws.
Life does not just happen to us. Life is predictable. I can see you, sit down with you and watch how you spend your time for one complete week. I will easily predict your future. Why? Because everything is designed by laws. So mind the way you spend your habit. Mind the kind of habit you form. Your habit will determine your 5 years, 10 years from now, how you spend this precious time. Every single day, make a deliberate effort. It is not going to be easy. You have to discipline yourself to invest in yourself every single day. At least if it is 1 hour, read a book, learn something every day. That is what successful people do. What differentiates poor people and wealthy people is their habit. Poor people watch television. They are professional football analysts. They can analyze football like crazy. They will tell you all the stars in football. They will tell you all the musicians in the world. They will analyze all the matches in the world, all the players, but they are broke. Please, please, please. I love you guys, all of you in this academy. I didn't say you shouldn't watch football, but don't spend your time in analyzing football or watching football every time. Don't do that. Those guys they are watching, they are living their dream. Somebody say, what can you do to someone that lost 3/4 of his deposit in forex trading? You have to learn. Samuel, you have to learn. Somebody said, thank you for the lesson. Oh, good, you're welcome, Mr. Samuel. Samuel, you have to learn. It is not over until it is over. You have to keep learning. So my friends, I love you guys. Don't waste your time with people who are going nowhere with their lives. You have to learn to set goals in your life. Set goals, write your goals down. Set goals. And your goals should be written down. Once you have goals, you know what goal setting do for you? Once you have set your goals, you become a man of discipline. A man or woman with discipline. People who does not have discipline are people that does not have goals. They go to anywhere they call them. Anybody calls them, they can follow anybody to anywhere because they have no clear direction about where they are going to in life. You should have some kind of direction, a sense of direction in your life. Don't play around with your time. Focus is important. Focus on your goals on a daily basis. Let something wakes you up. Ask yourself, what is waking me up today? If you don't have your why for doing something, you will not have a life worth living. Don't just wake up, fine boy, and you don't know what you're doing. Fine boy, fine girl, but you don't have a direction. Most people are living their life without direction. So if you have direction in your life, have great vision, dream big. Dream. Don't be afraid of dreaming. Dream. My mentor said something about dreams. He said most people are failures not because they aim too high and miss. He said most people fail because they aim too low and hit. Dream big, guys. I want you to be dreaming, driving, flying the world with private jet, owning your own private jet. Have that kind of mindset because you can do it. It all depends on how you believe. That is why you have to monitor the way you think. Your thinking is important. So ladies and gentlemen, I want you to keep learning every single day. If you can spend every day 1 hour, at least 1 hour to invest in yourself, you become one of the best, you become one of the richest men on earth, at least 1 hour every single day. Either you're reading a book, you're listening to something positive, we are attending a class like this, do it every day for at least 1 hour each day. Do it for 5 years. You will see what will happen in your life. It happened to me. I'm not telling you what I've done practice. This is what I do. I spend time every single day either learning, reading a book, doing one thing or the other. That was how I changed. If I can change, you can change. Discipline yourself to do it. It is not going to be easy. And people may not even see the value of what you're doing, but keep doing it. If you are doing the right thing over and over, it will only take time. You see the result of what you're doing to yourself. Success is a sum of little effort repeated day in and day out. And failure is also simple things you refuse to do day in and day out. Success don't just happen to you one day, you see just success. No, it's little effort day in and day out that will make you successful. So my guys, my friends, my brothers and sisters, I want to encourage you to work on yourself every single day. Work on yourself. Don't work more on your jobs. Jim Rohn said, if you work more on your job, you will earn a living. But he said, if you work more on yourself, you will earn a fortune. Most of us were in jobs and we spend our time working on our jobs. But work more on yourself. Warren Buffett was asked by a reporter. A reporter asked Warren Buffett, what is the best investment one can make in the world? Warren Buffett, we all know, is the highest investor in the world. Warren Buffett looked at the reporter in the eye and said, the highest investment you can make is in yourself. So invest in yourself every single day. It's important to do that. What you're doing is good. I'm so proud of you guys here tonight. So guys, thank you for coming for tonight. I want to encourage you to keep coming. Our class, we're going to be having our advanced class. I will announce it on the group. So once you hear about any of these our classes, just join and learn. The more you learn, the more you earn. You have greatness in you. I'll see you in our next class. Good night. All right, good night, Samuel.